Lepus Proprietary Trading, we're doing a quick podcast with a couple of guys here. So I want to welcome Aidan and Jake, who are managers of Lepus Proprietary Trading, and also Jay over here, who's one of our trainees, but with doing pretty well and a little bit of experience. So we're just going to have a general conversation about trading and whatnot to just to give everybody a little bit of an insight on, what we're about and, and what we can achieve with doing in day trading and swing trading and what we can offer. Okay. Yeah. So if you've got some questions there, go ahead.
Okay. No worries. Well, Jay, would love to talk to you, mate.
Yeah, no worries.
So I think starting to facilitate this discussion, some context would be great. I think there probably won't be very many people out there that know a little bit about your background, so it'll be a great place to start.
Yeah.
I guess, what do you do for work and how did you get into trading?
Yeah. So basically I've been in finance, accounting, running businesses, insolvency, turning around businesses, but in combination been trading pretty much for the last 20 years as retail and institutional. Done I did do some time doing some education for a company on currency trading. And also had my own private couple hundred traders that I was teaching price action on currency market for a bit, and that kind of led on meeting people that got me into the institutional trading side for a while, and that was primarily heavily in options, S&P 500, a lot of spreads and writing a lot of naked puts and stuff like that.
Yep.
But
fantastic. See, this is already going to be something that's very interesting for people to listen to, right? Because, you've said a whole line list of things there that you've done in your history. And I know, a lot of people that are viewing might have even read that book, Market Wizards.
Yeah.
Have you read that one?
Yes.
You both all know about it. A lot of the big traders that are out there that have done, great things, they're not out there posting on social media. They haven't got, this big, big following, but they're out there killing the market. So things like this, opportunities like this, is a great opportunity for people to get inside the mind of someone that's actually pretty heavy as a trader, which is good. So that was really good. So what was that like? How's that differ from the way you're trading at the moment?
On the institution side?
Yes, I mean,
obviously it's a lot. You got a lot more pressure. It's you got to get used to big volatility and swings. Basically, you got to remove the dollar sign away and trade the charts, not the count balance. Because if you get caught up in the dollars, you just won't place the trades when you're meant to.
That's one of the biggest psychological hurdles that everybody has, and it's something that I push very hard, is for people to stop looking at their P&Ls, okay? Because it's all about trading points or trading pips. If you can get that, use that as your benchmark, and it helps with your mindset, right? So, if you're trading 50, 60 lots on the DAX German index, then you can have, $2,000, $3,000, $4,000 swings pretty easily, right? You can also have drawdowns of up to $16,000, $20,000. But if you're looking at a P&L and you're comparing that against how much of your mortgage that is, or you could have gone to a European holiday with that money, you're not going to really want to be clicking on the next one because you're too scared to, right?
Yeah.
And it's very important that everybody has the correct mindset when they're coming in and trading, right? It's not pulling the handle and the money comes out. It's being strategic around how you view your position within the market, right? So I think on a lot of platforms you can actually get rid of the dollars and turn it into points. Right?
Yeah.
So that, when you are watching it, so that you can go, okay, I'm only 40 points down, that's achievable to get that back, right? Or that's achievable to, work your way, out of a drawdown when you're looking at it as points, right? So, yes, it's very important that happens.
Do you do that as well?
Not currently, because the size isn't on the
isn't there
DAX,
yet.
size isn't there. I don't really care.
Let's go back to what we were just before we started this podcast about. You know, you're now shifting from you're reasonably successful in what you've learned and the strategies that you've now implemented.
Yeah.
You're now going to go in. You're shifting now into, okay, let's start becoming serious at this, because you've done the demo, you've done the small account, right?
Yeah.
Let's size it up a little bit,
100%.
right? And this is the biggest hurdle that everybody gets into, or the biggest roadblock that they have, is that they will not be able to successfully transition from a small account or something that's doesn't matter if you lose it, to something where, you know, this is big money now. This is where I'm going to make the money. Everybody falls on their face when they do that. Okay.
What do you think the main reason behind that is?
It's mindset. They're not correctly positioned themselves in that they're not ready to move across, because as soon as and we all know, and you did the seminar with me the other day, is that trading psychology or trading mindset is almost exactly the same as sports psychology, right?
100%.
Because we're working in a framework where it's probability, and we also have to understand how our stress levels change our behaviour, right? So if you're not ready to transition and understand how to behave with your triggers and your stress levels, then you'll 100% guarantee that you'll fall flat on your face, right? And that transition using NLP or, you know, just coaching will get you to that position where you're ready to fire off on larger lot sizes and things like that, right?
I think why a lot of people struggle in the first place when they start increasing size is they don't actually truly believe in their system or themselves as traders. Yeah. Because they start, like, if you truly believe in it and you're confident and you've got enough repetitions in, you don't really care about that next trade. You know, you're looking at 100, 1,000 trades, but particularly new people, they think they know how to trade, but they don't truly believe. Otherwise, they wouldn't care as much on any singular trade.
Correct.
It's more looking at it on a macro point of view of 1,000 trades.
Correct. So how I describe it to all of anybody who's training with me, you know, and, you know, Mark Douglas, you know, all of these big psychology traders all say the same thing, and I say the same thing as well. It's just look at it as a normal distribution, right? And all you're doing is you're putting dots within that normal distribution, right? Yeah. And if all your dots are slightly skewed to the, you know, the positive standard deviation of that, then you're in front, right? Yeah. So a single trade and a single trade's outcome has no bearing on anything else except for just becoming part of that scatter plot.
Yeah, because everyone falls in the trap of too much recency bias. So if the last two trades are losers, it just screws their minds up. Yeah. Or if they're positive, they start getting overconfident. Instead of just, like you said, just hitting it. Yeah. Just look at every trade's one of the next 1,000 trades, and as long as you risk appropriately. Or people tend to, when they take too much risk in the early days, and then as they account and grow, tend to go the opposite way and then go on too little risk.
Up. Right? Yeah, because that's loss aversion, right? So, you know, if you're already green for the day or you're green for the week, you know, and you've got brilliant trades that are sitting there and they're screaming at you to take it, and you're not taking it, then, you know, you're putting yourself at a disadvantage because you've got that loss aversion. You don't want to give anything back, right? You don't want to have that feeling of pain right on a Friday afternoon, right? For the weekend, you don't want to go through the weekend going, oh damn, I just lost it all. Right. But, you know, as a pro trader, you would just be taking the trade regardless whether it is, whether it isn't. If you win, you lose, it doesn't matter. You absolutely don't care anymore, right? You just take it like a robot. Yeah.
Otherwise, you are skewing the distribution results, and you're trying to make random outcomes become like singular, and it's not going to work.
Correct. Because usually what that is, you know, when people hyper focus on you know, the single trade and the single outcome of that trade, you know, their attachment to that outcome is what's going to make or break the good trade. Okay, you know, sometimes even if we've got a system and the system has got a positive edge to it, then that there's still got a fail rate to it. Right, still got a loss rate to it. Right, so if it goes against you, it doesn't mean that it's a bad trade. No. It just didn't work, right? Yeah. And that attachment, you know, if you've got attachment, well, that's a perfect trade. We've got confluence, we've got the setup there, everything's going well on it, and it's not going to, it doesn't produce the outcome, right? Then it's just part of that system. Yeah. Yep.
So here's another one for you, Richard. I think you'll be able to answer this. So as a trader that's up and coming and developing, right, they have studied, they've put the work in, they are still seeing the swings in their P&L, but they're not sure whether that's a skill issue or whether that's psychological that's coming in through those.
Well, it's very, it's you know, if you're going to sit in your bedroom and trade on your own and think you're going to be able to be a successful trader, it's not going to happen. 100% will not happen. You need third party. You need a third party to, you know, look at all the top sports people in the world. Like let's Djokovic. Let's use Djokovic as look him up. He's number one in the world. How many coaches has he got? Right, 2, 3, maybe 3. Right, he is top of his game. He is an unbeatable player, but he's still got third parties all telling him where he could just tweak, right? Tell him things that most people, you can't see yourself, right? It's hard to hold that mirror up to your face and see what's actually going on unless a third party is going to help you make that decision, all right? Which will tell you what's going on.
Brings me on a good point of why I did reach out to Richard and decide to bring Richard as my coach. I didn't particularly go there to Lepus to learn how to trade, but I needed someone to hold me accountable because I'm particularly coming from a more professional background. I trade a lot better when I'm accountable to someone and someone I know is going to be reviewing results, questioning the risk, and opposed to doing it by myself. Life gets in the way, work too many hours, my normal job, and you know I'm very not consistent in showing up. And you know Murphy's Law. You miss the good setups.
Yes.
And then when you go back to take it serious again, you get in the choppy zone or whatever. Yep. But a big part of it was to have a coach to hold me accountable and to eventually get back to managing funds.
So what are your results look like at the moment?
The day trading ones?
Yeah.
Placed about 300 trades over 3.5 months, I think I've been with you now. Which is 34 sessions I've done.
34 sessions.
With 20, I think I'm up about 30 positive and 4 losing sessions. Okay. And the losing ones were quite small.
Yep.
There are definitely some periods I've still got a lot of improvement to do. Overtraded a few.
Yeah. Well, everybody makes mistakes, right? I still make mistakes today, right? It's about, you know, going, okay, cool, that's a mistake, let's move on. You know, we don't want to get down in the dumps about them. Yeah.
But I'm glad there's only like 4 of those sessions out of 33. And I do know that all of them I had a bad day at work and I didn't really want to trade that night and I just wasn't the right mindset. But fortunately, I'm very tight on my risk control. So even though I took too many trades and had some losing periods, it only took a few trades I let run to recapture it all and turn them into green days. But I consider them bad days because I overtraded. And didn't follow my rules 100%. And whenever I take my few wins and just close the computer and walk away, I tend to wait and be more patient, take better setups. But it's personally for me, it's the first time day trading that I'm more of a swing positional trader, but I've never been able to make day trading work. Combination of things, I never really gave it the effort it needs. And I didn't have like a Richard that showed me some really good strategies that actually work, not some YouTube strategy that if you pick out the perfect examples, it looks great, but the market, particularly on day trading, is quite choppy a lot of the time.
And
it's
you've
not
gotta
as
be quick.
predictable. And probably trading the wrong markets would be, now looking at the DAX, has really opened my eyes up. It's one that really moves, and
Liquid sessions.
you need that movement to get your 2-to-1, 3-to-1 risk reward. Like,
You need the liquid sessions. For
yeah,
sure.
100%.
In saying that, it's no point in trading a market outside of its session hours. There's no point at all, right?
It's like trading.
Unless you're in the session, unless you're trading the session hours,
Yeah.
right? Just don't trade it.
And typically
Pretty simple.
it's
Because
only first hour.
I get a lot of guys coming to me and go, okay, I'm going to be trading. I want to trade the NASDAQ during the Asian session. I'm like, what are you doing? Right? Just stop.
Yeah.
Right? Because the thing's just not going to move.
Yeah.
Right? You need the participants in there to move it. And you've got to know what those sessions hours are.
Yeah.
So you trade correctly on that session. The other thing with that is you've got to know the components of the session.
Yeah.
Okay, so like what's going to happen in the first hour? I usually call it the 2 TPO blocks, right? First 2 half-hour blocks. What's going to happen in those blocks? What's going to happen in the next session? Because if you get an open auction at the start, then you'll in the second hour you'll start to move, right? But then also you've got to understand that if we're still trading at 12 p.m. or between 12:30 and 1:30 p.m. Frankfurt time, everyone's at lunch, right? So the thing quietens down a little bit, right? So you've got to understand, what are the instos doing? What are all the big traders who are actually moving the market, right? Because the little retail guys, you're never going to move the market being a retail guy, right? But if you get inside the head of those instos and the big participants that are going to move the market, then you've got an understanding of when it's going to pop, right? When it's going to move, right? Does that make sense?
Yeah. For sure.
Okay, cool.
So do you have the same mindset as Jay there? You value a good day and a bad day versus depending on how well you follow your rules?
Well, sometimes you do slip, okay? Trading is not something where, you got to give it full attention. Okay, and if you're not giving it full attention, then you're opening up room for errors, right? If you haven't done your preparation before you start trading as well. So let's say the session opens at 9 a.m., right? You need to be there half an hour beforehand. Read the news, read your calendar, understand what's coming up on the calendar. Things like, is NFP or CPI coming up? We know what's going to happen, or we can kind of make an assessment of what the day's going to look like, right?
Yep.
And for an example there, if you do have NFP coming up or CPI, US CPI, the market will go really quiet leading into that news release, right? Because all of the, like I just said, all of the instos, they're all waiting for the announcement, right? So if you're trying to trade into one of those big news releases, it's not going to move, right? Go back and have a look on your charts. You'll see evidence of that all the time.
Yeah. I think for people starting out in trading, they're considering the fact that they need to, put obviously that time and attention into it. People that want to trade, they're typically quite intelligent. They're thinking, okay, I know I'm going to have to put the work into this. Yeah. Maybe I need to quit my job. Maybe how am I going to open up some time? They got family, they got commitments. What was that like for you starting out with trading? Did you have to juggle those commitments and tell us about how you're even trading today, still doing it?
Yeah, no, it's 100%. Definitely, I've always worked at the same time by choice a lot of the time. And that's purely I didn't want the results of my trading on a day-to-day basis determine if I can, pay rent, buy houses, go on holidays. I think it adds too much stress and it's not good in the mindset. So I've always worked in finance too, because it's kind of related, even though it's different. Running businesses, particularly when I was turning around businesses that are trading insolvent to profitable businesses selling off, it's still part of the same psychology, like knowing how to handle it when you cop 300 calls in a day because they haven't been your creditors haven't been paid for 2 years and they want to know what's going on. It kind of transfers over to trading to be able to handle those tough times. So I've always stayed in the finance, accounting industry, but purely just so I don't have to worry about the day-to-day cash flow in my own life. with kids, families, partners.
Yeah.
You know,
So
I like boats.
Yeah.
They get costly. So yeah, ultimately it's
Boat, the acronym for boat is bring out another 1,000
times 10. Yeah, so obviously when you get the stage where you can have enough finance or personal assets, a couple of years worth of wages in the bank, then I think people can start looking at, you know, working less and spending some of their profits if they're consistent.
What about the time element, right? So if people
That's the tricky bit.
Yeah, so how do people manage
That's why you need a coach.
family?
That's why I'm joining, because it's so easy when you get caught up in the day-to-day life and not be consistent and have someone hold you accountable for your results.
But it is the way to do it, huh?
100%. I guarantee you either won't make it or it'll take you 10 to 15 years if you're lucky. But you'll never get to any size without a psychologist or someone that actually trades too and manages money.
Yeah.
Not someone that is a trading coach but really don't trade any size, or they're basically just a retail trader acting as a professional, which the industry's full of them. That's the problem.
Yeah.
And like before you joined, obviously there's a lot of coaches out there.
Yeah.
I remember when we first had our discussion before you came on board, you wanted someone who was going to be there to hold you accountable.
100%.
And that was one of the big reasons why I think you joined.
Yeah.
But how did you determine that Richard was actually going to be that person for you as opposed to, you know, someone else out there?
Probably a bit of faith, to be honest.
Yeah.
But I had contacted Richard, must have been 4 or 5 years ago, and had a good conversation, and then I just remembered it. And when I was ready to come back, I think I had some of your stuff started popping up on my social media, probably because of you. No, and then I was just like, I was ready to get back into it. I said to my partner, I'm like, I need to pay someone. I'm ready to get back. I'm getting over, getting a bit over the big hours, and I'm ready to get back into it professionally again. So I want to go to a prop firm, and I believe you're one of the only ones in Australia. I don't know of many other. I know there's some in Sydney and that, but it's more I really want to get back in the prop firm space. And
and like coming into the traineeship, like first 2 weeks, how did you find it? First impressions?
Good, very good. I watched half the videos, to be honest.
Cut that out.
Too many hours in there. No, I was just really interested in the DAX, so I watched that video like about 5 times in a row. And to be honest, I just started trading it, and it worked. It was as simple as that. Off the bat. I just kind of focused on one setup to begin with and started adding others. Ironically, the more I add, the worse I find the results aren't as good as just probably singular. Focusing on a couple setups instead of trading 5. So I've definitely got some areas I want to improve on.
Yeah.
Particularly I want to make the exit more mechanical. It's still a bit too much discretion in my liking. Okay. I'm seeing... I'm getting out a bit early on a lot of trades and seeing them run another 20, 40 points. So I want to come up with more of a mechanical. I don't need to decide. I just follow the mechanical exit.
Trailing stop.
Yeah. I think entries are fine. I can get in, find my entries really well. But I've definitely got a lot of room improvement on the exits. And find that sweet spot between my personality. I like the high win rate. If I'm going to let them run, I have to accept that my win rate's going to go down, which, So that's
the trade-off between win-loss and System R, right?
So I'm going to spend some more time on that and trying to perfect that a bit better, and then focus on scaling. Yeah. But the old analogy of using the house as money, so I'll scale on my profits. I don't really want to. So as I make more, I'll risk more, and if I have a bad run, I'll scale back and use the house money to opposed to just keep tipping money in.
Just to clarify, you mean house money as in what's in your trading account?
my profits
Yes,
that I've
your
made,
profits,
I'll
correct,
risk those.
right.
Not.
Yes.
I am fortunate. I do have capital behind me to put in when I prove to myself that I want to trade 50 lots, but I'm not in any rush because I don't want to blow it up. It's I just don't want to
You've
do
got
it.
to take time.
It's too hard to make that money to blow it up in the market. I'm not doing that. So
I think a lot of people, before they come into any sort of mentorship or training program, tend to be in a mindset of like they're in a rush to make money.
100%.
What would you say to those people?
Well,
Richard?
the reality of that is that if you're brand new to this, the reality is you're not going to be good for at least 2 to 3 years, right? With hard work, okay? Now, obviously, I say to everybody, keep your day job. Do not quit your day job, right? And just progressively go through it because, and especially with all of individuals, you can learn everything that's, content online, read all the books that I'll ask you to read, things like that. But, it's also about coming to, live sessions to actually watch me do it so that you can get all of the tiny little nuances that go along with each individual situation, right? How do you establish, are we in an open auction, sideways day, and what do we do with that, right? So you're selling the tops, buying the bottoms, right, until we get the break, right, the evidence of a breakout, then we switch over to trading the trend, right? So
I found that very valuable for myself.
yes,
Those
right.
live. Ironically, some of the nights I didn't trade the best, particularly 2 of them, it was the night you weren't running it. Yeah, and I'd kind of let my own discretion get into the trading, and that were my worst nights.
Well, I think with those live sessions, it's just about watch me over and over and over and over again until it's just becomes an automatic thing, right? Find where your supply demand zones are, find where your support resistance are, and then understand what the FDAX is doing against the actual DAX.
Yeah.
The DAX
And
CFD,
for new people, although it's, even with someone that's had experience, the first few sessions I was like, I can't make sense of what you're doing in the beginning, but what it is good for the new people is it also provides them confidence to see you make money day in, day out. It's like, actually, this is real. I've just got to get better at it. Like without, it's very motivational for the new people to know that I can get there if I just do
it's also good to see somebody actually put their money where their mouth is. Right?
Yeah, it's very rare to have it so exposed to be live every day.
Completely transparent.
Completely transparent. Nothing, you can't hide anything when it's live. Nothing better than that.
I think the live sessions are definitely one of the most favorite things that the trainees have, part of the traineeship. But for the people that aren't part of the traineeship that might be listening to this, what would they expect to see in those live trading sessions?
Well, they see me do the preparation at the start. So at the moment it's winter in Melbourne, so the DAX opens at 9 a.m. Frankfurt time, but it'll be 5 p.m. Melbourne time. Okay. So from 4:45, I do it for 15 minutes, but I prefer a lot of the trainees to start a bit earlier, 4:30, at least half an hour preparation, right? Get yourself prepared, and what that looks like is going through the news, going through the chart, remembering what happened, putting your volume profile on, putting your supply demand areas on, etc. Reading the news, just a broad news. You don't have to go into like the fine detail. You can just go into the macro stuff. Currently at the moment, Israel's lobbing bombs into Iran, so oil's gone through the roof. Okay, and we got to understand how that's going to affect other indexes.
Oh, the volatility, the VIX has already spiked 3 or 4 points in the last 2 trading sessions because of that.
Cool.
So that's what I've started. This is where my swing trading kicks up a gear again. But that will transfer over to the DAX, so the volatility range is going to expand while this is going on. So for the new traders need to know to adjust their position sizing and size of stops.
If we go to higher volatility, then you reduce your size, widen your stop, okay?
Don't be afraid to let your runners run. More these sessions when they run.
Well, yeah, when we are in high volatility, you can get 200-300 points out of it.
Yeah.
Okay, instead of the usual 50 points that we might get out of a trade.
Yeah.
But going back to what you asked, then they'll see me place a trade. What I do is whatever's happening in my head comes out my mouth.
Yeah.
Right, so that they can hear what I'm thinking. Consistently, and I draw the chart, I adjust it, put my channels in, etc. And I go, don't forget that we need to be not hyper focused on the smaller time frames. Let's look at the 4 hour, 15 minute.
Yeah.
Let's just quickly check on the 1 hour chart to see if there's any fair value gaps or whatever it might be, right? Also flicking over to the FDAX as reference because, obviously all the institutional traders are trading the futures market, so that we could see what the volume's doing on the futures market as well as the CFD, right? So, yeah.
But even the simple things in some sessions that help me is when particularly like you'll be saying, we're in a long leg, no shorts,
yes.
Making it blatantly obvious, don't start trying to fade the market.
Correct.
When we're in the long leg.
That
helps.
I pretty much, very loudly say, this thing is a freight train. Don't stand in front of it, even if you think you've got a huge area, support resistance area or major handles of some sort. Don't stand in front of it just yet, right? So I'm very vocal about, making sure guys don't counter trend trade on strong markets.
Yeah.
Right? So that's one thing a lot of people don't miss out on is their ability to adapt to market environment. Right, understanding what environment we're in at the point in time and trade it appropriately to that. Right, we've seen a drop in the DAX, a pullback in the DAX, has been trending nicely.
Yeah.
But if we're, at the top or the bottom of that market and it's going sideways, we've got to trade it for that environment.
Yeah.
Okay. Don't sit there and do nothing or continually trade a system that's obviously not going to work in that environment. Right. So just those slight ability to adapt.
Yeah.
Now that environment can change like that. Right. But you've got to recognize it. Right?
Yeah.
And trade it appropriately.
Particularly if news comes out.
Correct.
How often does news get dropped straight on open? I've been noticing that too.
Yeah, sometimes. Sometimes.
That doesn't sound corrupt. Let's drop it right on the open.
Yeah. Nothing to look into there.
Usually, a lot of central banks they don't care at all, especially the Swiss, the SMB, right? They'll go and say one thing one day and do the complete opposite the next. They just don't care, right? Now, remember the SMB, Swiss National Bank, they pegged their currency to the euro, and then 24 hours beforehand, the head of the SMB says, we're not going to unpeg this. Yeah. The next day, bam, they unpegged it, right? Because they didn't want the market to, everybody to be relaxed about it. And this thing flew, right? That because of that drop, it actually collapsed.
It blew up a lot of brokerage houses.
MF Global, which went down because of that.
The chart of that, then boom.
Yeah, bam, like in an instant, right?
Same with that.
All the servers, most servers collapsed, right? They all froze up, and brokers went under.
Because
and
they
that's
don't care.
Important thing for people to understand too, that stops aren't guaranteed
Definitely
in market.
not.
Because I don't know if you remember, I traded through the flash crash, and that was very quick, and I was naked quite a bit of puts.
Yeah.
So I saw volatility in my portfolio jump 6 figures in like 30 seconds.
Yeah.
And it's where it's kind of, the psychology comes in, because I didn't panic. I knew how to roll out and adjust, and I actually recovered it in a day, and I was up ahead by not freaking out. And I was seeing that volatility and placing the trades from a pure mathematical point of view, because options is all about maths and probability. So it's about
it's it's just
not
take this into context, right? If you're on a market maker, broker on a CFD, you know, firstly, everybody will be carrying a stop, right?
Yeah.
If anybody's trading with me with no stop, right, they'll get a little bit of a ruler across the back of the hand, right? But yeah, ultimately, if you're on a CFD provider, if worse comes to worse, they'll just close you out of the position, right? When you get down to 30% margin requirement, they'll automatically get rid of you of the position.
Yeah, because they don't want to be holding the bag.
But if you're running, you know, as from an insto level and you're running naked, right? You know, there's no security there at all, right? You know, bam, you're gone. And you know, you can even go into negative equity, and that negative equity, you got to pull it out of your own pocket.
Quite aware.
You might not have a job the next day as well, right?
Yeah.
Right. So. But, you know, that's when you're in those insto positions, right? You've got all the risk managers sitting there.
In saying that, you also know in the professional what you risk appropriately for black swan events.
Correct.
So I wasn't over leveraged in this circumstance to begin with.
Yeah.
It's just it can move very quickly.
Yes.
And you need to react. You can't think. You just need to be prepared, always knowing if you ever run in naked puts, you need to always be prepared for the worst scenario and know what to do if it happens. And, you know, a lot of firms also blew up on that day because they were over leveraged, not understanding the tail end, the 3 standard plus deviation.
Fat tails.
Do happen. So it's being prepared for that and have an action plan already in place. So you just don't think.
Yep.
Just start moving
Well, that's
quick.
the thing, you know. If you do have a normal distribution like that, you know, that third standard deviation can move. It's not set in stone, right? So, you know, and that's why the black swan idea says that, you know, if there's currently a third standard deviation, it's not necessarily the limit.
No,
right?
100%.
You've got to prepare for it.
Yeah.
Very rare though that it happens, right? But
I've seen it 3 times in my life.
yeah. Remember the Procter
2008,
Gamble? Remember the Procter Gamble fat finger? Do you remember that?
Yeah.
God, that was amazing, right? Somebody put a couple of zeros, too many zeros in there, and crashed Procter and Gamble to almost zero. And I was trading at something like $80. I can't remember what it was trading at, but somebody put too many zeros into the computer, and the stock went to almost nil. Right, went to 1 cent, and then they just started buying it again. So somebody lost a lot, somebody made a lot.
Yeah.
Donation.
So what, they shorted it all the way down, did they?
Yeah, well, it was instant, right? So it flashed it straight to 1 cent, and then everybody started buying it all the way back up.
Yep.
And even looking at
I
oil,
probably would have been the same person who shorted it, right?
Yeah.
Because gone, oh God, so they go and buy it again,
Yeah.
right? To cover
even
their loss.
oil's a good example. No one thought it was even possible to go negative.
Yes,
Like-
because there was holding costs on oil, right? So it goes to negative.
Yeah.
Yep. Even big experienced guys going, what's happening here? That's going into a negative pricing.
Yeah.
Because it becomes a cost center rather than a profit center. Yeah. Holding oil, sitting in barrels and things like that. You know, that's why it goes negative. But
Never expected that.
CL, light crude. Yep.
Yeah.
Definitely.
Maybe let's talk about the onboarding process. You know, when you got started with Lepus, what did that look like over the next few weeks? And you know, what were your expectations coming into it? And you know, what was the outcome? Did it exceed expectations?
I might say some of it off the podcast. But in general, there's a lot of content to get through. Even for someone that has been around a while, I definitely think for new people, it's going to take them 3 months at least to start clicking. It's a lot of trading terminology, obviously, and there's a lot of content, or great content, but it's definitely not going to be, hey, I'll just watch videos for a course for a week and jump in and start being successful.
Yeah, and I say to everybody, you know, we're not flipping burgers at Macca's,
It ain't.
right?
No.
You know, when it's not, you know, you've got to do the work, right? You've got to learn the language, you've got to learn the systems, you've got to get used to all that stuff. So it will take a while, right? But if it's a career that they want to pursue, then, you know, it's like anything, you know. You can't ask me to go and be a brain surgeon in 3 months, right? It's going to take, you know, I've got to go to university, I've got to learn it, I've got to practice it, I've got to become somebody's, you know, I've got to have my own mentors if you want to do something. So, you know, the idea is, you know, if you're going to do it, decide to do it properly, and you've got to be prepared to, you know, do the work, read the books, come to the session, show up, right? And everybody who does do that, they all become profitable. Yeah, all of them. The ones who don't become profitable are the ones that half-ass do it. Yeah.
But the beauty I did find, and what I still really like about it, is you're learning something that someone else is trading size on and makes money on a daily basis out of it. There's not much out in the industry like that people are actually trading size on and consistently pulling out of the market. So that's where I find personally that's the biggest value. Like,
and you're referring to
basically, you can come along with a beginning faith in the methods, and then you trade for a couple of months watching it on a daily basis, and you see it happen over and over, and like, it really, like, you can save people 10 years of just getting lost in YouTube rabbit hole of BS. This is actual methodologies that work, and that's what I was blown away. I didn't think I'd just hit the ground running, making money right from day one, but it's purely because of the methods that you're teaching actually work in the live market, on live accounts.
Yeah, that's right.
And you're talking about trading live, like watching Richard trade live at 5 p.m. Yeah,
particularly his methods. You know, it's not a lot of them, but you don't. Less is more in trading, and it's not.
What do you mean by that?
What I found personally, and most professionals say, the more you make it uncomplicated, the better you'll trade. Because it really comes down to risk reward at the end of the day. But it's more about finding your entry points where you can put your risk in the right place and give it the opportunity for reward. But I like Richard's methods because they're very defined. I know exactly on the chart at what point I can get in. I know exactly where I can place my stops. And like I said, the rest is working out the best places to get out, whether it's your next support resistant level, whether it's a mechanical trailing or, you know, a combination of all above. But it's very specific. It's not discretion trading where you're like, I think the market's going to turn here. Yeah, it might that day, but does it do it for the next 100 days? So that's a lot of the value is actually you given the methods that work. It's a matter of just rinse and repetitions and building up internal faith. And then build up your size and then compound and go from there. But it's probably the value I got from it the most.
And where are you at in your journey now? Like, would you say, like, you've been with us for 3 months now?
I'm in the journey where I need to start putting more size on, and which I'm okay with. It's just I want to spend the next 3-6 months of having a bigger data sample, improving my exits, and put some more size on, and look at manage funds is the end goal.
And
Richard, are you happy with Jay's progress so far?
Yeah, like you said, you hit the ground running, and the results look good, right? But the biggest hurdle that everybody comes across is sizing up, right? And to really recognise what's happening to you, with your behaviour is a hurdle, right? So there's going to be a lot of practice in transitioning, doing a transition. It might go a little bit wrong at the start, but we've got to go back, got to go forward, back forward until you're comfortable and have that relationship with the money, right? Because a lot of people have the wrong relationship with money when it comes to trading.
And I know personally myself, I will not take on capital until I know uncomfortable with it.
You'll definitely not get any capital until you prove otherwise, right? It's very important that especially when you're running with other people's money, right? That like mine, that we're solid. We're absolutely ready to go, right?
But even from a sizing position, I'm fortunate I have the ability to be trading my own funds in the future of size before I transition over. It's not like I've only got a small capital myself and then Richard all of a sudden gives me a lot more. They've never actually got to that size first.
Yeah, well, usually
I want to build up my own funds and then it's just an extra bit on the top. It's not reliant on, my future's not reliant on Richard's decisions. I think it takes the stress off and you become a better trader because you're already building up to the size. Yeah. Yep. You already got your psychology down pat. You're already comfortable taking 4 losses in a row over a couple of sessions. You've already worked out your risk cutoff points. So I think that's the way I'm approaching it is I'll get to the size of my own and then in the future.
Yeah, well, a lot of people might not be able to do that themselves, right? But the idea is that, even if they can't they don't have their own capital backing them, right? We do use a little bit with them, a little bit of money, that if something does go a little bit wrong, it's not going to kill us, right? It's not going to kill them. Right. Yeah. Either way, they can use maybe $2,000, $5,000 of their own money, and then we can just use that to get them their behaviour correct. Yeah. Right.
It's much better than some people coming to you with a back test of 5 years saying they want funding or
so you don't
30 days worth of profitable results.
What people got to realise is that we're not an FTMO, we're not a Top Step, we're not one of those online prop firms. Okay, we're traditional prop firm.
What's the difference, just for people?
Well, just for people to understand, I'm not looking for people to pay money for me to have access to capital, right? Yeah. 99% of those people will blow it up in the end anyway, right? Because they don't have the correct mindset on that. They haven't done the transition, right? And these online prop firms they're betting on that, right? Because they know how difficult that transition is. Okay. Now, when we train people, they can use all of what they learn from us and do that cross onto these online prop firms. But when we actually hand out money, it's investor money, it's our money, it's real money as well.
And so it's regulated money too.
It's regulated under ASIC, AFSL, etc. So we make sure that the person who is going to be on trading with us is at a high level, peak performer. Does everybody make it? Nope. To be honest, they don't.
But it's just like professional athletes. Not everyone becomes
correct, right?
Olympic gold medalist.
Everybody who does the training with us will, and they do it seriously, and they put all the effort in and show up, etc. They all end up profitable for themselves at least, and they can go off to one of those online prop firms if they want to.
Yeah. One of the points you brought up was like backtesting, and what a lot of people probably don't understand too, that backtesting is the past. Like forward testing is where where the value is. Backtesting, like you can't tell me the world events of this week are going to be exactly the same in a month. Like you may do really good in backtesting for 6 months, but 90% of the time the forward testing isn't going to line up with the backtesting. So
backtesting is really there's limitations with backtesting. Right. One of them is unknown events that are coming up. The other one is your data set. Is the data correct? Pricing, things like that. Are you curve fitting to historical data, which is a huge,
most common,
just curve fitting the parameters to fit the data, and then they wonder why it doesn't work going forward, right? So backtesting is good that it gives you a benchmark to see whether you want to keep pursuing it.
We need to know if you've got an edge to start with.
Yeah, just know does it have an edge? If it does, then let's do forward testing. See whether the other one with back testing, unless it's purely mechanical, if you're the one pulling the trigger, can you pull the trigger, right?
Yeah.
Do you have the ability to pull the trigger at the right time, right?
All those biases come in that you mentioned
And
earlier.
all the biases, right? So there's human risk in there as well.
Yeah.
Right? So, yeah.
How about we talk about, because a lot of people might have that ambition of getting funded, right?
Yes.
You know, and I've seen people come to you with just like 30 days of profitable results or a back test, but obviously that's not going to cut it.
No, it's not.
What do people need?
Well, what they need, if somebody's going to, if you let's continue on that journey of training, right? Then we go into a phase where, you know, you've got a little bit of money underneath you. We'll do 3 months of you trading that money, and then we'll slowly just build you up from there, okay? Everybody's different, okay? I don't know, you know, Jay might be different to Cam, might be different to somebody else, okay? So it's really just learning who that person is, where they're at, where are they ready, what needs to be improved on, things like that. So some people might take, you know, 3 months and they're just brilliant straight up, okay? Some might take a year, okay? Some might take a little bit longer than that, okay? But obviously what we're looking for is we're looking for calculated risk, okay? Risk-taking, no cowboys, no averaging in and out of positions. I mean, we do scale in and out of positions, but we don't want endless unsecured risk on, you know, a martingale strategy. That's an absolute no, right? So, you know, does their system fit within what we want, okay? And, you know, we do generally just want everything that, you know, if it makes money, that's great. But, you know, like I won't want a trader that trades daily on a daily chart, right? Getting enough data to see whether it's profitable or not on a daily chart will take 10 years, okay? You know, somebody who trades once a month, no, that's not our style. We're not into those big broad swings.
You said to me that 4 years ago, that's why it's taken me 4 years to come back, because I was a daily trader. That's why I kind of stopped there, because I'm like, I don't, in that point in my life, I didn't have time to dedicate to day trading. I'm like, when I'm serious and want to come back.
But in saying that now, we're really only trading the first 1 to 1.5, maybe 2 hours
That's what I love about it.
right? So we're really only trading about 2 hours a day.
I only trade 4 to 6, and half of that 4 to 5 is me prepping. But if I see a setup happen, which happens most of the time, I'll take it. But there's only one setup, and it's generally one of my favourites. In that about 4:30, I see the old VWAP 50% trigger. So, but it's the beauty if you can make really good money in a 2 hour window. Who doesn't want that? I don't want to sit in front of the computer anymore.
Yeah.
I mean, that's all I do. I mean, you see what I do.
Yeah.
I basically make
There's
money
plenty
in
of
1 hour,
opportunities in that first.
and then I'm done. And that can be, you know, $5,000 in the bank straight up.
Do you think
And
there's
I see that consistently.
Yeah.
This isn't just like, once a month I might do that. It's very consistent.
And then on a Friday, if the footy's on, I don't trade at all.
Yeah, that's a good point. I think it's a misconception that's very common. People think you got to be in front of a screen.
When you start out, right, you have to get obsessed by this stuff, right? You've got to obsessively look at it. Don't just walk in there, because if you're only trading 1 hour a day and then you're forgetting about it, right, it's going to still take a long time. So especially when you're on a demo starting out, you've got to trade all the time. You have to stare at the charts so you can just learn, right? Yeah. But when you get to a high level, 1 hour a day is all you need.
Yeah. So for the beginners, how much time would you say?
Well, you know, take every spare moment you've got, right? Now you've got day job, you've got you know, you've got the kids, you've got, you know, driving kids to school and whatever, things like that. So, you know, don't give that up, okay? But, you know, progressively work at it. Instead of watching Netflix at night, you know, watch videos of me. Yeah. Okay. You know, so it's like anything, the more you put in, the more you'll get out of it. It's simple. Okay?
You just got to make the time,
but
I guess.
At the start, you've got to do the work, right? So that you don't have to do the work later.
Yeah.
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 And for new people, they need to place enough trades to learn their good and bad behaviours. Like we all have had them.
Correct.
Like,
And you've got to go through
learn
that.
what it's like to overtrade and pay the price on small dollars, but experience it. It's the only way you're going to.
You've got to go through that discovery mode as well. You know, like I could sit here and go, listen, VWAP is it for day traders. You know, that's the, you know, obviously we use a handful of other things in there, but you know, you've got to try out the ADX. You've got to try out Deutschen Channel. You've got to try, you know, Bollinger Bands. You just have a poke around with it to see what's going on. Right?
To realise most of it doesn't work.
To realise that it's not going to work. Realise that all oscillators are just rubbish, right? You know, so you've got to go through, you know, that discovery mode. But then everybody will just come back to end up doing what I'm teaching them anyway.
But joining you guys, they 100% will shortcut that.
It will shortcut your experience of
yeah.
running around in circles for 7 to 10 years.
Yeah, because there's many traders out there still trying to find an edge 15 years on because they just keep system jumping after jumping after jumping.
Strategy jumping, right?
Yeah.
You know, as soon as something doesn't work, people tend to strategy jump. And that's, you know, you're just wasting your time.
Yeah. And generally people do that because they haven't actually got the data behind them to know whether it works.
Not only that, but they also they're trying to do it in their bedroom on their own, right? They don't have the person beside them go, no, mate, just put that aside. It's not going to work. Trust me, I've been there, I've seen it. Right? You know, this is where we should be focusing on. You know, it's not actually the chart and your ability to analyse the chart. It's you, pal. Right? That's where the problem is, right? And people just can't be honest with themselves, or they're, you know, especially young guys, their egos are sometimes a little bit too big, and they don't want to go get the help, and they don't want to go. They don't want to admit them to themselves that, you know, like, I don't know what I'm doing.
Yeah.
Right.
And I think it's also a lack of, you know, actually good people out there that have track records who can give you that advice. Like, you know, you look at it in different industries. Like, for instance, if you wanted to go to the gym and become a bodybuilder, or you wanted to lose weight, there's a lot of PTs out there you can choose from and get some results, and definitely shortcut, you know, the time it's going to take to get those results. But with trading, I mean, there's not a lot of mentors out there, and there's not a lot of quality. Like, that pool's even smaller. So I think that's why, you know, Richard, the program's going so successful at the moment, is because, you know, you're one of the only quality mentors out there in Australia.
Here's something that, you know, I think people might be asking themselves: why don't you just trade for yourself? What are you doing? Teaching all of these people and training all of these people.
Yeah, good one.
Yeah. So why don't you just do it yourself? Well, I can do it for myself, and I do it for myself. Right? So, but the thing is like, we're building a prop firm, okay?
Yeah.
And the idea is that so that, you know, the pressure comes off my shoulders with huge amounts of capital behind us. You know, it's not always just up to me, so I can spread my, you know, have some slightly different styles that are in there, some other people in there, and everybody tends to work way better when you're in a group environment. Right.
And you probably find yourself you trade better when you know you've got eyes on yourself.
I'm killing it at the moment
because you're not going to blow up.
Just having everybody there, because like you're on the nightly sessions and you're talking back to me, telling me stuff. Yeah. I've got, you know, Chris, a bunch of other guys who are really getting in there. You know, there might be an announcement that I've kind of like I forgot about, and they don't forget about this or this happened. Things like that. So when you're actually in, you know, got some high-level guys all working in the same room together, right, we kill it. We absolutely kill it.
That's the beauty of having such a connected, I guess, you know, ecosystem these days, as opposed to maybe 15 years ago. You don't need to do it alone, right? You can be alone in your bedroom.
The good thing about it is if we go back into the 90s when the internet didn't really exist, and all of, you know, Discord or whatever chat servers, etc., didn't exist, we'd have to have a floor with traders. Yeah. Now what we've got the ability for people to be at home, right, or in their office, and we all come together at the same time. Yeah. Now the people that are in our room, it's not just in Australia. We've got people that are in Scotland, in New Zealand, in Singapore, all over the world, and they're all coming in. I've got a guy in Philippines, right? Yeah. Yeah. So they're all, you know. It just, you know, I don't have to go and find people from all around the world and have to put them up here in Melbourne, right? Yeah. They can just come in, right?
Yeah.
Yeah, so that's another advantage as well.
Yeah. Yeah, it's definitely really important having a community. Like as you said, guys like Jay, even though, you're a very high level trader and you've been doing this a long time, they're still holding you accountable to that high level.
Correct.
And, the beauty with Discord is you can message people, you can, post your trades, you can talk to each other, give each other feedback.
Yep. Well, that's the other good thing is that everybody can post up their trades. They get the pat on the back from everybody else.
Wins and losses, not just your wins.
Wins and losses,
too.
right?
Yeah.
So, a good trade can be a loss if it's if you've shown how you've managed that loss or you brought it into just above break even or something. That's a clap. Right. Good on you. Right, because you've managed your risk, so your risk to reward doesn't go into the opposite side, right? Yep. So, we celebrate losses as well as just as much as wins. 100%. But it's good that, especially new traders that go, oh, cool, let me show you what I've just done. Yep. And everybody gives them a little clap or, a little bit emojis or whatever.
Yeah. I think
they realise that they're on the right track.
Accountable too.
Yep.
They don't want to be the person that puts up great results and then blows it all up.
Well, the other thing is we do the trader development sessions as well, so that, people, this is part of being accountable because, I'm going to ask you for your journal and your macro statistics and things like that, and we're going to show everyone, right? So for new people, that's intimidating, but, when you're down the track a little bit, you've got a journal that's worth showing and we can talk about you and your trading in front of a group.
Right. What's the importance of having a journal? Because I know a lot of people out there don't have journals.
Well, here's the thing, right? Psychology study done with primates, humans and primates, has shown that human beings, we can't remember anything, right? So out of any set of events or like a block of event, you can only remember how it ended and how good it was. Okay, so like let's say that you went and saw a movie at the cinema 6 months ago and I asked you about it, right? You can't tell me every piece of dialogue. You can't tell me detail. You can only tell me how you felt about it and then kind of how it ended. Yeah. Or what made you, what the main plot was maybe, right? Yeah. So that's why we have to write things in our journals so that we could go back and see our progress, but also remember what was working, what wasn't working. One of the other things that I do with all of our trainees is that it's an absolute must that you go through, you take a photo of all of the really good trades and take a photo or screenshot of all of the really ones where you messed up, right? And have a pain folder and have a good folder, good and bad folder, right? So that at the start of every session, before I get there, that you go through all of the really good trades and you remind you, yes, that worked, yes, that worked, yes, that worked, yes, that worked. It just drums it in your head so that when it happens on the chart, you go, I just saw that, right? Bam, off we go, right? So it's positive reinforcement and it's, a bit of NLP going on in there as well, okay?
And even reviewing your good trades, they can be better. Even the good ones can be better, particularly on like what I'm experiencing is how far letting them run. And you'll only know over a few hundred trades whether it's worth letting them run or just take your profits on one ATR or what risk reward makes you feel comfortable. And the most profitable, you won't know that unless you track all your macros. You should be
running a minimum of 2R risk to reward. That's minimum.
As a rule of thumb.
Minimum.
And for the beginners, what does that mean?
Well, your risk is 1 unit and your reward or your target is 2 units. So that even if you get a 50% win-loss ratio, you're still in front.
So a unit is X. It could be $1, 10, 100, 1,000, whatever it is.
Correct. Correct.
Yeah. So one thing I'm definitely taking out of this, right, if we're looking at the congruence between how you've set up yourself and how you've set up yourself, because I think a lot of traders, and I know even for myself starting out with trading, effort is one thing. Taking it seriously is one thing. Like, you can be sitting in your bedroom taking trading seriously, putting in the hours, but becoming successful it's the success principles that ring true, not just in trading, but in business. It's not just effort, it's the strategy, not just trading strategy, but strategy to become successful. Yeah. Like, if you're setting yourself up with the right information, the right mentor, and you're putting in the right effort in the right places, that's what's going to get you to succeed. Because you can be in your bedroom 100%. For 10 years, putting in all the effort, and it's just like, you could be, it's like trying to, go up a hill, but you're walking and then someone else just drives in a car straight past you. Like, it's...
Yeah, it's a classic case of garbage in, garbage out.
That's right. So you need to... That's right. So, yeah, just to add, like, you've become successful in business, becoming successful in a prop firm as well. You've applied those principles to trading, and even if you just want to be a successful trader, you need to think of it like a successful business, apply the correct strategy, right? And that's then what gets people the output. So that was really, really good take from that.
Yeah. Like, when you say apply the right strategy, you're not just talking about trading strategy, you're talking about the overall
success strategy.
Yeah.
That's right.
That's a good point.
So are there any traits in humans that you find that make them successful? Or is there an edge in personality? Is there anything like that? Or people who can come from anywhere?
That's a good question. Is it nature? Is it nurture?
Yeah.
Is it a combination of the two? It's a good question. I don't really know the answer to that. I think all it comes down to is your desire.
Yeah.
Right? If you've got you don't have to be a mathematician. You don't have to come from the industry. I mean, we've got guys that are, FIFO workers that have just gone from zero to hero, pretty much. We've got guys that are, in their early 20s. I mean, young Pete, who's he's 24 years old now. Yep. I probably met him when he was 20, right? Taught him everything that I knew. And this kid, he turned up in my office and he was hassling me, right? And I love that, right?
Yeah.
So he goes, oh, what about this? What about that? What about this, right? He'd always show up to, the one-on-ones. He'd show up to all of the events. He'd show up to everything. He'd come in and sit with me and ask me questions and whatever. Then he disappeared for a bit. He came back and he goes, check out what I've done. He's making an absolute killing, right? So, the math, there's no, high-level math that we have to do. Year 9 math is probably as far as you need to get. Understanding probability is literally it, okay?
And I think it's can be a bit counterintuitive. Some of the brightest people cannot make trading work because they just cannot accept that it's not
intellectualize it.
Yeah, they can't accept that things aren't perfect and fit in a box. Like, trading isn't perfect.
Yeah, I said this at the seminar on Saturday, in that, sometimes engineers become the worst traders, right? Because they want precision.
Yeah.
And they want certainty, right? We don't work within that world, right? Yeah. That's one of the mindset things that, we discuss a lot is that, we're not working in the zone of physics, right? Where there's a lot of certainty in it. We're kind of getting into quantum physics where you've got to work with uncertainty, right? But if we understand that it's all just probability, then we've got a 1 foot forward.
Yeah.
Yeah.
Fantastic.
Okay, man.